Hello everyone, this is Arnaud De Lapierre. Today, we will study the main stock indices, these big parameters that measure the performance of equity markets. In this video, we will talk about what lies behind famous names like Dow Jones, S&P 500, the Nasdaq, the CAC 40, and many others. I offer you a clear approach to understand where they come from, how they are calculated, and why tracking them is essential in any investment endeavor. Stay until the end because we will decrypt each of these indices to help you better grasp how financial markets work. For a little over a century, stock indices have played a major role in allowing investors and commentators to assess the market's health. The very first to come into existence was the Dow Jones Industrial Average, created in 1896 by Charles Dow and Edward Jones. At that time, it included few stocks and reflected the overall trend of the American market. Gradually, indices multiplied to cover different sectors and geographical areas. Their history is fascinating because they show how the global economy has evolved, moving from traditional industries to more technological sectors over time. A stock index is a basket of representative values calculated according to specific rules. They often include the largest capitalizations to measure the overall market mood. Each stock carries more or less weight in the whole depending on its capitalization or another criterion. The final result is a figure that fluctuates continuously, providing a snapshot of the current trend. For investors, it's a powerful tool that allows them to grasp the evolution of a given stock market at a glance. In summary, when the index rises, it's often a sign of confidence, and when it falls, it can indicate certain concerns. If you are looking for a boost to follow indices and receive notification alerts on the market, reliable alerts, the Notrade app is for you. Available on iOS and Android, it is completely free and offers clear trading signals and in real time for markets, cryptos, indices. The interface is very intuitive and allows you to navigate with ease. The big advantage is that it is free. Once again, I repeat, but free. Taking advantage of this type of tool can really make decision-making easier and avoid missteps. With our help, you gain responsiveness to seize opportunities without unnecessary stress. Let's start and return. Talk about the Dow Jones Industrial Average. It is one of the oldest and most popular indices on the international scene. It now brings together 30 emblematic companies, mainly American, but active in various fields. Historically, it was based on an arithmetic mean of each stock's price, but it has evolved over time. Even with only 30 components, it remains a widely followed indicator. When the Dow undergoes significant fluctuations, the media reports on it immediately. Its history gives it a certain prestige, and many people continue to refer to it at the daily. Next comes the S&P 500, an index that includes 500 large companies listed in the United States. It is often considered the most representative. By comparing it, same. Thanks to the diversity of its components, there is a varied combination ranging from tech to finance to health. These movements provide a fairly broad view of the American stock market. Many professionals use the S&P 500 as a benchmark to assess the profitability of an equity investment. When we see this index rise, it often suggests that the American economy is in a positive phase. The Nasdaq Composite, another major index, primarily focused on technology, even though it now includes diversified companies. Originally, Nasdaq was the very first electronic exchange, which gave it a face futuristic. There is a strong presence of high-tech companies, particularly those specialized in digital, computing, or electronics. The fluctuations of the Nasdaq can sometimes be more intense as tech stocks are often more volatile. We all know it. It's a somewhat niche sector. Following this index gives a quick insight into investors' appetite for innovation. When the technology sector soars, the Nasdaq tends to surge. In Europe, the DAX 40 is the major representative of the German stock market. It gathers 40 leading companies based in Germany and from various sectors. You see, you find both car manufacturers and chemical or engineering groups. Often considered a barometer of the Eurozone, the DAX reacts to economic announcements, decisions by the European Central Bank, and the industrial health of the country. Historically, it has often shown steady growth driven by Germany's export strength. Each time a major born, it is perceived as a signal of optimism. The FTSE 100 or FTSE is the leading index of the British market. It includes the 100 largest companies listed in London by market capitalization. Its name comes from FT, Financial Times, and SE, Stock Exchange. This index is closely followed by investors who see it as a summary of the London financial market. Even though some of these companies have an international reach, their development also depends on local conditions, especially since Brexit. The FTSE reacts to British monetary policy, to the value of the pound sterling, and to major economic movements across the channel. The Nikkei 225 is one of Japan's key indicators. It includes 225 large Japanese companies ranging from electronics to automobiles. It was created in 1950 and is managed by the Nihon Keizai Shimbun newspaper. The fluctuations of the Nikkei draw attention because Japan remains an influential financial center in Asia. This index also reflects the policies of the Bank of Japan, which is very active in economic support, perhaps a little too much. Its trend can give an idea of the country's industrial and technological situation. When the Nikkei jumps, experts often see it as a boost of confidence. In France, with the CAC 40, which covers 40 large companies listed on the Paris Stock Exchange. Its name comes from continuous assisted quotation, and it remains a reference to evaluate the French stock market trend. The sectors represented range from heavy industry to luxury, passing by energy, which creates a certain balance. The CAC 40 evolves according to the economy of France, but also the global situation. Since many of these companies operate internationally, its progress is often followed daily, as it fuels newspapers and debates on the health of the markets in France. To follow these indices, you can rely on live information streams offered by most brokers or specialized sites. I remind you that the Notrade app allows you to track the event in real time, all for free. The graphs make it possible to visualize day-to-day variations or even in real time. One can thus identify upward or downward trends and compare the performance of different sectors. The indices often serve as a basis for designing various financial products like ETFs that replicate their movements. Having a solid knowledge of these references helps better target one's choices and avoid pitfalls related to fluctuations. Sudden. Indices do not all resemble each other in their calculation method. Some, like the Dow, are price-weighted, while others, like the S&P 500, are based on market capitalization. In the first case, an expensive stock will have a big impact on the index's value, even if its company is smaller. In the second setup, it is not the stock price, but the company's total value that counts. Understanding these differences is important for assessing potential volatility and better anticipating the movements of each stock index. These indices are often interconnected as the economy is increasingly international. Disturbances in the United States can influence Europe or Asia, and vice versa. When a macroeconomic event occurs in one region, the impact is felt elsewhere through a correlation effect. That's why we sometimes see chain reactions in the markets. Knowing who sets the pace depending on corporate earnings announcements, monetary policies, or geopolitical tensions helps maintain a coherent view. Even though, of course, each area has its specifics, there is often a domino effect that can spread quickly. You can see it with somewhat key events. You follow all the stock exchanges with the time zones when they open. And then they fall one after the other. I hope this overview has enlightened you about the main stock indices. Better understanding them is already a step towards an investment approach. More serene. These historical or more recent indicators allow us to gauge the market's temperature and identify major trends. You now have solid foundations to decipher the Dow, the SP, the Nasdaq, or the DAX, FTSE, Nikkei, or even the CAC 40. If you enjoyed this video, consider subscribing and liking to support the channel. Thank you for your attention. This was Arnaud De Lapierre, and I say see you very soon.